depending upon where you are practicing insurance, you see this map and you can see what your state standards are. The professional standard of care, where the agent isn't expected to be a true advisor on risk. They're expected to uncover and inform customers of possible loss exposures that they face and offer insurance solutions. Order taker, all you do is procure the coverage that's requested by the customer. That's all. Like, it's that simple.
This episode of the Insurance Stream podcast is sponsored by Viva Virtual Assistants. With Viva, you can save over 60% of the cost of hiring a full-time employee. Not to mention, employees are impossible to find right now. Viva makes the whole process easy and affordable with college-educated, bilingual virtual assistants that operate in the convenient central time zone. Go to vivavs.com and see why hundreds of insurance agencies across the United States have chosen Viva for their administrative staffing needs. Again, that's vivavs.com.
All right, I am here with Ashley Riley, Ashley Fitzsimmons, and Jeff Smith of Ohio Insurance Agency and IA Valuations. They are an awesome partner for our group, for our podcast, and we really appreciate having you guys on today. We're going to be talking today about something that is like the elephant in the room that not a lot of insurance agents, I think, really like to talk about maybe very much, but it's super important stuff, right? We're talking about errors and omissions. We're talking about what you can do to minimize your E&O exposure, practical steps you can take to make sure that in the event of something arising, which, we work in insurance, right? So it's only when the bad stuff happens that things really come our way. And in those moments, I mean, anybody that's been an agent for any length of time can tell you that the customer, some customers, not all, some of them will quickly throw you under the bus and say, maybe like they never offered me that, or I didn't know that I was rejecting that, or I didn't sign that. And so, what do we need to do as independent insurance agency owners to make sure that those kind of exposures are covered? Because it's critical to the long-term success of your agency to make that happen. So we're going to go through what you can do to prevent E&O claims on your agency side. And then we're going to go through, let's talk about coverage right at the end. We're going to talk about the E&O coverage and different things that you need to look for on your E&O policy, no matter where your policy is at, to make sure that you have a well-rounded coverage in place for your agency to protect probably what's going to be your largest asset, even larger than your home, your insurance agency. So with that, I think Ashley Fitzsimmons and Jeff Smith are going to kick it off and get things going here. And we'll start with this E&O.
Well, Abe, thanks so much for having us on. We appreciate it. We're excited to be here and to talk to you and the agents out there about the importance of protecting your agency and your professional career as an insurance agent. And E&O is a part of that. Professional liability is a very real part of that. So my role, I'm an attorney by background. I lead the organization, but I'm going to start on the professional standard of care. And we'll get into that in a second, but I want to have Ashley and Ashley introduce themselves before we do that. So jump in.
Hi, everyone. I'm Ashley Riley. I am the Director of Risk Management here at OIA, and I handle our agency services team, which means I handle the errors and omissions coverage on a daily basis, getting to know these agents and helping them to avoid E&O claims and making sure that they have the right coverage.
Hey everybody, I'm Ashley Fitzsimmons. You can call me Fitz. I am the Director of Professional Development here at OIA, and I think it's important to point out that a lot of people within our organization have insurance backgrounds. Ashley Riley just did a very high-level overview of her history, but she's been in insurance for a long time. And prior to being here as the Director of Professional Development, I was also in your shoes. I was in a family-owned agency for the first 10 years. So I think that's important to highlight that we've been on both sides of the table, so we know what you're going through.
Yeah, so we come at it. We've got your legal covered a little bit. We've got your risk management covered from the E&O side and the procurement of coverage. And then we've got your agency operations and your internal operations and how you cover, and try to prevent claims. So I think we've got, Abe, I think you put together a pretty good lineup, and so we're excited to get started. So I'm going to start with the professional standard of care. And as we get into that, I mean, the first reminder is just this, like, mistakes happen. We're all human. They happen. Things happen. But there are things we can do to prevent as much of that as possible. But E&O is going to happen. I have yet to meet an agent in my career that has not had an E&O claim at least threatened. Not necessarily saying they've all had them filed, but every agent has had the experience where they've had a disgruntled client, threaten an E&O claim against them. Many have had them, and fortunately, it's not super prevalent throughout the business, but it is. I would say it's more common than it's not. So there will be claims in all likelihood in your career. So just be prepared for that. Let's manage the risk and make sure that we understand the standards by which you're operating, and you have the tactics in your agency to ensure that you do all you can to prevent it. So I'm just going to talk about the standard of care briefly, and then we're going to get into some very practical tips and tricks around how you can prevent your exposure and minimize the potential E&O risk. So there are on the two ends of the spectrum. There are, in the standard of care of being an insurance agent, there are the professional standard of care, where the agent is expected to be a true advisor on risk. They're expected to uncover and inform customers of possible loss exposures that they face and offer insurance solutions. So I'm reading that because those words are very, very important. You are expected to do a very thorough analysis of their business, of their home, of their financial interests, and make sure that you're proactively offering the solutions to them. On the other end of that spectrum, and there's three other standards in between, which I'll touch on very briefly. On the other end of that spectrum is called the non-professional order taker. Order taker, all you do is procure the coverage that's requested by the customer. That's all. Like, it's that simple. Think about that for a second. Like, it's a little bit of a concerning scenario because you have a customer who likely doesn't know anything about insurance coverage coming to you, and they have to request the coverage. So that legal standard for an E&O claim in the States, where they have the order taker status, is pretty, it's pretty high in terms of meeting that legal standard, showing that there's been an E&O claim. So those are the two along the spectrum. We're going to talk about the other three and everything in between. Here's the map. That you can see the different standards of care across the country. So depending upon where you are practicing insurance, you see this map and you can see what your state standards are. So there's a couple professional standard of care. There's a couple on the order taker status, but most are bunched in that middle area where we'll talk about what those specifically mean in terms of the broad view of a special relationship, the narrow view of a special relationship, and then the case-by-case determination of a special relationship. And all of these have been established in the court system by common law. They typically are not, in most instances, they're not statutorily codified, meaning like there's not a codified professional standard of care for an insurance agent in the state of X. It's normally, we've learned this through case law, where litigation based upon a claim against an agent. So, all right, let's talk about this first one. I mentioned it earlier in terms of the spectrum. We're going to start at the low end of the spectrum. There's no duty to advise under the order taker status. So those states, if you're operating as an agent, you do not have a duty to advise. So you shouldn't hold yourself out as an expert. You shouldn't say, hey, I'm a professional insurance agent, I'm an expert in this, and I'm going to advise you on your insurance coverage. There's no expectation that you do that. In fact, you do not have a duty to advise. You're only required to procure the coverage requested or to timely notify the insurer of the prospect of the inability to do so. So that's really it. The agent, the important part of this at the end here is the agent may still be found liable for providing false or misleading information. So if you do lead someone to believe that, hey, I can get that additional insured on your policy, and you ultimately don't do it or you can't get it, there's a risk there. That's a liability claim because you proactively told them that you can get that coverage for them, and actually the carrier doesn't want to provide it. And so their policy is not going to cover it, and they wind up in a situation where they need coverage. You're going to be on the hook in all likelihood, even in the order taker status states. Okay, so if we keep going, This is the special relationship with a narrow view. Again, so we're just going to move from order taker status to, okay, there's a unique relationship between the parties, but there's a very narrow view of what that is. So in this, you have the producer and the insurance professional. They have some kind of lengthy relationship. They have a unique way of dealing with each other. There's a long-standing relationship between them. They have a course of history of advising the customer on coverage needs. So there's an established relationship. It involves some counseling. It involves some advising on insurance needs. And then, the other thing in this one, in terms of the narrow view, is like, here the advisor, the insurance professional, is actually putting themselves out as an expert. And the customer's relying upon them to be an expert. So that's a special relationship with a narrow view. If we keep going, here's the case-by-case determination. So the producer assumes a duty to advise by agreement or promise to the insured, leading the insured to believe that the advice will be provided. So again, important part here is they tell them, and then all of a sudden they tell the client or the prospect that they're going to advise them, and then they start to rely upon that. So the courts are going to look at that on a case-by-case basis. They're going to look at the fact scenario, and they're going to evaluate whether or not the insured or the prospect assumed, or whether or not they held themselves out as an expert and were going to advise, the agent did, and whether or not they assumed and relied upon that responsibility. So that's where you'll get into the case-by-case basis in terms of evaluating and assessing whether or not there's a special relationship. So if we go a little bit further, here's a broad view of that special relationship. We're getting closer to that professional standard of care that I talked about earlier. Producer, here, the situations where this arises, where the producer misrepresents the nature and the extent of coverage. They select limits without the input from the insured. So they imply that there's adequate coverage, but they don't actually work with the insured or talk to them about it or confirm. They undertake to provide a client with complete coverage. So we've all had that. Oh, don't worry, you're covered. You got great coverage. You got all the coverage you need. You can't do that. And then you can't, don't respond to ambiguous requests with ambiguous answers. That's going to get you in a situation where, you have created a special relationship. So, all right, the final on the spectrum of relationships, it's a professional standard of care. So again, we started at order taker. We've worked our way up all the way to the professional standard of care. Where you have a professional standard of care, the insurance producers are considered experts simply because they have an insurance license. You've gone through the testing, you are qualified, and you've been given a license by your state, and all of a sudden you are expected to uphold a professional standard of care. The insured may prove the breach of a standard of care by simply showing that the producer failed to offer coverage or a limit about which the insured should have been advised. So that's the failure. That last part is the failure to procure coverage because you didn't advise them on it. That professional standard of care, there's an expectation that you're going to talk to your business clients about cyber before they have a cyber breach. Any coverage that they may need, you're going to be proactive in advising them. The key here is that typically it requires an expert witness to testify in order to prove that there was a professional standard of care. So, Fitz, I'm going to kick it over to you and Riley to take us through the next step of this. But those are your professional standards of care. Every state is different, so know what yours is. Understand what yours is. So from an E&O perspective, you can operate in a way where your clients have an understanding and expectation that that's the relationship that you're forming with them, and you don't potentially create exposure where there shouldn't be.
Yeah, that was absolutely fascinating because I've been a licensed insurance agent for over 15 years. I did not know the differences that you just presented. I had no idea. And for those of you, anybody that's listening to this and streaming it instead of watching it, I would encourage you to go find the video version of this. It's on whatever platform you're listening to this on. There's a video version of it because we just had a map up of every state in the country, and it's color coded by each of those 5 different levels of where the bar sits for your state. And I saw that was 2021, right? So, I mean, that's like super up-to-date information. How often do those levels of care change? Like, is there like pretty much never once it's established? It's just, kind of the law of the land? Or could there be a court case that comes along that alters that? And if so, how often does that happen?
Yeah, Abe, you're spot on. There could be a court case that starts to alter that precedent that's been established in the state. It can happen. it's pretty rare. Like we won't see a lot of movement in the map. But depending upon, the judicial philosophy of your court of last resort, typically it's your Supreme Court that will ultimately be the arbiter, where you will find that's where the decisions come from that ultimately establish a professional standard of care. If you see that their philosophical view on cases of professional liability start to change, and then they can move from an order taker or from a narrow view professional standard up to the highest level of professional standard. Doesn't happen often, but it does happen. And so it can happen, and you're spot on in terms of how it does.
So we're operating off basically case law. And if we're looking at the last, maybe say 10 years, we didn't have this conversation beforehand. So sorry if I'm putting you on the spot with an answer that I don't know the answer. So maybe you don't either. Do you know, ballpark figure, how many states in the last 10 years have altered their, because I mean, this case law, I'm imagining insurance is old, right? So I'm imagining a lot of this case law goes back a really long time. How often in the last 10 years, do you know has there been a handful of states that have changed it? Not any at all? I mean.
And Abe, I don't know precisely. My thought would be it would be a couple at the most that have changed. Our case law, to your point, our case law is decades old. I mean, it's over 50 years old. So it's been well established. And while there have been cases that have challenged it repeatedly, the court continues to cite the case back in the 1960s. Yeah, I mean, they just continue to cite that case because there's not been any change by the legislature. And, ultimately, there's not been enough prevailing, issues in the court, or the judicial philosophy of the court hasn't changed. So it would be a handful at best that would have changed.
That's awesome. So when you're, those of you 5 or 6, 10 years down the road from now, it's probably still pretty accurate information. That's awesome. Appreciate that. Cool.
All right.
Well, let's get moving on to this second part. A lot of us heard there that many people fall in the in-between categories, where it's a case-by-case basis or a narrow view of things, which means you've got a little bit of both ends in there. And I think, if you go on any sort of social media, or we go to any sort of conferences, people are always hounding us. As agents, we are trusted risk advisors. We have to advise people. So I think that we'd be hard pressed to find an agent that truly is just an order taker, because it's in our DNA to want to help protect the people the best that we can, and our clients the best we can, and our agency. So regardless if you fell in the order taker state or the professional state, we're going to go ahead and give you some tips and tricks to help prevent an E&O claim from even happening, regardless of what state you fell into. And I mentioned to Abe earlier when we hopped on the call, we can spend 8 hours talking about this. I mean, we could probably spend 16 hours talking about it. So you guys are going to get very high level, very things that you should be doing right now. There's no reason that you should be not doing any of these things that we're going to talk about. And if you're not, you definitely want to sit down and think about it and how to implement it into your agency. So let's jump in. The first 4 things we're going to talk about. We're going to talk about new business processing, policy servicing, cyber risk management, and also social media risk management, because that's kind of an area that people tend to forget about, and they think that things can't happen there, but it's definitely a big place for exposure. So for those of you listening, you can just answer this question out loud. Where do you think that the most E&O claims come from? And it's honestly, because I'm an overthinker, I overthought this one. I got this one wrong. So the majority of all E&O claims come from new business. 40% of them do. I went back and forth between new business and renewals, because renewals typically fall through the cracks. They just go forward. But truthfully, it's from the new business process where these claims come from. So we're going to go ahead and start there. Talk about new business processing and tips that we can give you in order to make sure that you're going to minimize the risk there. So let's go ahead and start with gathering and assessing the new business exposure. So the fact-finding process is critical to preventing E&O claims. What I will tell you right now is most people come in because they're not happy about something with their current carrier, whether or not maybe the rates went up, maybe they weren't happy with the claim and how it was processed, maybe they just can't get in touch with their agent. So what you need to remember is that when they come to you, it's a whole new ballgame. You cannot just base it solely on price, because when you base things solely on price, you are missing out on the fact-finding process and making sure that they're covered properly. And it does, get a little bit tough for us, because underwriting systems, as we all know, they've changed the application process. I mean, I was able to do a few quotes when I was in our agency in under 2 minutes on things. And when you rush and you want to get a fast quote back to somebody, that's when mistakes happen. That's when you're missing information. And that's also when you're not asking the right questions of the client to see if you're missing something on coverages.
And on a side note, and hopefully this is okay. On a side note, like that creates a better sales process. You're probably going to experience higher close ratios, and you're going to experience longer client life cycle of your clients by doing what you just said to do. Because you call like 1-800 nobody cares is what I always call like the big huge box insurance type. And you call in and they don't do that fact finding process. They're just selling on price, which is probably the reason for their high turnover on clients. But also, if you want the preferred clients that stick with you long term, that don't have the billing issues and are really low maintenance, this is awesome advice. I just want to throw that in there.
Yeah, I mean, you hit the nail on the head. You sell on price, you're going to lose on price. So what's the point in doing all of that work when you're not going to retain the client anyway?
Who knew this was the sales training, right?
Exactly. But Ashley, do you have anything that you want to add to this slide? And that's okay if you don't. I just kind of ran through it quick.
Yeah, you made sure to talk about the important things. Definitely not selling based on price. You want to make sure that you're offering coverages. Like they could be missing coverages on their current carrier, and that's a good thing to point out. So no, I'm good.
I saw Property and Casualty News. I think it was like Property Casualty News 360 or something like that. And we posted it on our social media page, but I think the number was staggering. It's like 80% of consumers are concerned that they have a coverage gap when it comes to insurance. Mm-hmm. And it's like everybody out there trying to sell on price. And so you can lower your E&O exposure, get more clients, and retain them longer, all in one fell swoop.
Perfect. So let's see, moving on here. One thing I want to talk about with the gathering and assessing exposures, people love to talk about themselves. They don't love to talk about insurance, and it's painful for that, but they love to talk about themselves. So when you're going through the fact-finding process, first of all, and we'll hit on this a little bit later, but everybody should have a fact finder that is consistently used throughout the agency. It's not only going to help you with the E&O, but it's going to help you with the entire process because you're going to have all of the questions that you need to address from all of your carriers. So you're not going to have to go back and say, oops, do you guys have PEX plumbing? Or oops, what year was the roof put on? You're going to have all of those questions addressed in one area. But the thing is, don't just open up that fact finder and say, okay, first name, last name, email. Ask them leading questions. Oh, I hear a dog barking in the background. Do you have any pets? Oh, you guys have a hobby farm that you have people come and pet the animals with? So you have to kind of just pry a little bit. And when you find something that is a hobby of theirs, get them talking. People do business with those that they know, like, and trust. So you have to get them to trust you, have a conversation like you're not just in it just for the policy. And the reason I say this is that's really going to be helpful when it comes to the challenges with gathering data, the people having limited time or the lack of willingness to answer all of these questions. So having a conversation makes it a little bit more fun and relatable versus just simply asking the basic questions just to get through the fact finder. Ashley, want to hop in there?
Yeah, I was going to say, like one of a really important question is like about that occupation, especially like if you're trying to sell home insurance, if it's like a stay-at-home mom or dad, making sure that they aren't trying to increase their income by watching other children in their house. If they have like a home-based daycare, that's definitely going to open up some additional underwriting concerns that you want to address and could be a very big gap in coverage.
You know what? And that just opens up a whole other can of worms that we won't go into today, but I have a presentation built out about how sharing is a liability, not sharing is caring. And, stuff that 10 years ago, I didn't have to ask about people renting out their pool. I didn't have to ask about people renting out their garage for storage or even Uber Eats. I mean, back home in Scranton, PA, Uber Eats still isn't a thing, I don't think. So we don't have to worry about that there. But in Columbus, every time somebody's pulling up to my door, I'm panicking, wondering if they have the right coverage. So it's definitely a different ballgame out there. And people are doing a lot of different things these days. And you have to be on your toes, listening for those red flags to go up and making sure that you're educating the client so they know what they're getting into.
Mm-hmm.
So just some different ways to assess customer exposures. Like I mentioned earlier, coverage checklists. You need to have these in place. Like I said, they need to be consistent throughout the agency. Everyone needs to be using them because this is going to help, like I said, not only with quoting the multiple companies, but it's going to help with documentation. If somebody says, yep, I have a pit bull or a Rottweiler, something along those lines, but then magically the Rottweiler disappears, basically, I'm going down a rabbit hole here with that explanation, but you want to have every single thing that they said documented on that quote sheet. So you can come back to it and say, no, you told me originally that you have this dog. How come on the application you're telling me you don't have this dog? Research.
And
go ahead.
With coverage checklists, if you utilize them, you will actually, depending on who your E&O carrier is, it could get you a discount on your coverage. Because the carriers see that as a way to help, like you guys are taking the measures to mitigate any type of losses. So using these is definitely good for both documentation and potentially saving you money on your E&O insurance.
And also, you definitely, when you're doing these coverage checklists, you want to ask about all of the occupants in the household. And this is a great way to stay in contact with your clients, because maybe they have a 14-year-old, so you can set an activity in their system. Hey, I know that it's time for your kid to get licensed. Did they get that yet? Did they pass? Let's talk about adding them on. So you really can use this tool. It's not a one and done, you write the policy and move on. You can use this moving forward. And with research, this is both a blessing and a curse. Once it's on the internet, it's never gone. I mean, I've got some college pictures out there that are definitely still out there, no matter what I've done to try and remove them. It's okay to do a little research of your prospect. Maybe you just have a gut feeling that, hey, I don't know if this person's telling me the truth. Maybe you just want to do a little research and see, what their house looks like or what their cars look like. Well, guess what? You can do that because it's probably online. And this could save you from a potential E&O claim, because maybe they said, hey, I don't have a trampoline, yet every other photo they're posting is their kid doing a backflip into their pool off of the trampoline. So the research can ultimately help you, whether you like it or not, unfortunately, because there are definitely some scary things out there. And Riley, how about you take the next two?
Yeah, definitely going out and doing a physical inspection on the property. If you have the capacity, it will help, like the research, it helps open your eyes to potential things that the insured forgot to tell you about. I personally just recently got a trampoline for my children and had to call my insurance agent and tell her, and then request an umbrella. But had I not been in the insurance industry, I never would have thought I had to tell her about that. So going out and inspecting it can help you open up those additional things. And then educating your insureds when they're looking to shop their coverage. Don't tell them you're going to quote apples to apples. You want to look and see what their exposures are, and let them know, hey, you don't have this currently on your current coverage. You need it because if there's a claim, you won't be covered. And so this is why the price is higher. You were exposed here. So educate them on what they think they need versus what they actually need.
Yeah, I'd agree with that. And then, and another thing on the apples to apples, because it seems like a lot of consumers come to you and that's I want apples to apples, right?
Yes.
Well, what I would say too, because I insured contractors and, back in the day, and contractors were kind of notoriously cheap and skeptical of the sales process and stuff like that. And I always would tell them, it's possible that you're overinsured. It's possible that, when we're looking at this, that you've got coverages in place that somebody put into place long time ago, and you've been shopping apples to apples, and you don't need that anymore. So, apples to apples really doesn't make sense on either end of the spectrum,
right?
And it could potentially save you money too.
That's a great point.
So this is just a quick summary of everything that we just discussed about the gathering, the information thing. So we won't go over, we talked about the checklist, the fact finders. The one that I want to really point out on this tip summary is staying within your expertise. One thing that I learned very quickly is that you will gain more respect from people if you say, I don't know the answer to that right now, but let me look into it and learn about it. Don't try to BS somebody, because that's going to hurt you, it's going to hurt them, and it's not worth it. So definitely you want to stay in your lane, with the types of coverages. This mostly comes into things with like niche coverages. If you don't, if you focus on personal lines and you get a big commercial account, get some help with it. Don't try to get through it yourself, because that's where definitely a claim would come through.
Yes, for sure.
So moving forward, for those of you that are watching this, if you're listening, go look at the video. When you send a quote to somebody and you send them something that looks like this is what you think you're sending them. Something super simple: bodily injury, 500, property damage. It's all the basic stuff that we know. Collision, other than collision. This is what they're looking at when they see that. They are so confused. They're just like, so do I have full coverage? Is the red car covered? I don't know. Can you add the trailer on? I guess I'm fully covered. They don't know. We do insurance every day, and sometimes it's very easy for us to forget that we do insurance every day. So if you talk in acronyms and say comp, collision, UM, you're going to have your agents or you're going to have your clients saying WTF. So don't do that. You want to make it as basic as possible. When it comes to proposals and quotes, it's going to vary by agency. Some of us do it the old school way. We sit down at the kitchen table, we have a cup of coffee with them, and we go over it. Some of us, we can't get to their house because they're across the state or across the country. So maybe we're using video quotes, or we're just sending the quotes via email. I will say this right now: if you're sending them via email, please stop and start doing video quotes. They're incredibly easy to do. It takes 2 seconds, and it cuts down on so much of the miscommunication. Also cuts down on a lot of the back and forth, because you're explaining it to them right over the video, and you'll have a higher close ratio. But that's also going to help with documenting coverage discussions, because you're going to say, hey, we went over this in the proposal in the video quote that I sent you, and I see that you watched it 3 times for 7 minutes each time. So what don't you understand? Where can I help you? And if there is a lawsuit, you can prove that you did that. One of the biggest things that helped in our agency, we did have multiple occasions. Well, I say multiple. We had 2 occasions where lawsuits were potentially going to be brought against us, and it never even got to that next level, because beyond just having the application correctly signed, we had quote sheets that we made ourselves. So it clearly said, I have read and fully understand this quote. I understand that I have denied these coverages. I must contact my agent if I want to make any changes. And doing something that took 2 minutes, having a sign off on rejected coverage, and also understanding the coverages they took, saved us from even getting to that next level of being brought in to a claim.
We did that too. We had a checklist of every single type of policy that our agency offered, and they either had to initial accept or reject. And not only did that, open the door to cross sales, but same thing. It was like, I thought I had this, and it's like, well, here's what you signed on your last renewal, and you rejected it. So.
Yeah, I've seen a couple of claims come through where someone tried to say that they were never offered like a personal umbrella, and the agent has the documentation in the file clearly stating it was offered on this date and you rejected it. Here's your signature. So doing those rejection of coverage forms, however you do it, is key to helping you avoid an E&O claim.
And don't be afraid. I mean, we all have those clients that come in and we just have a gut feeling that, it might be a great account, but you just know something's going to go wrong, or that's going to be the first account to turn on you in the event that something does go wrong. If you have an umbrella policy, spell it out on there. I understand that this umbrella policy covers A, B, and C. It does not cover my rental in South Carolina that's in an LLC. Spell it right out on there for them, so they fully understand that if something does happen in that South Carolina property, they are not covered. So moving on, let's go ahead and talk about binding and issuing now. So the biggest thing here, know your binding authority. Don't tell people that you can do something if you can't do it. And the easiest way to do this is to reach out to your carriers and ask them, what is my binding authority? And what are the underwriting restrictions on something that I would not be able to bind? Riley, I'll pass it over to you for the other 2.
Yeah, so making sure that you document when you received a bind request and you've sent it over to the underwriter to get it issued. Once you do that, you definitely want to set yourself a follow-up. Don't just rely on the underwriter to issue it in a timely manner. You're still responsible for making sure that it gets issued fully, and having that follow-up helps to make sure that you receive the policy and you get it to the insured in a timely manner. And then make sure that the insured understands that coverage is not bound until you've actually received confirmation from the carrier. So they don't walk out and go buy a new car and drive across town in it and then get in an accident and don't have coverage.
Which would be my luck. So.
Yes.
But talking about following up on the issuance and the receipt of the policy, so there are a bunch of different types of policy delivery types, and we were not going to go into each one of these, but obviously there's the traditional delivery where the hard copy gets mailed to the agency then has to send it to the customer. I think a lot of us have just the carrier delivering the policy directly to the agent, to the client, and then the agency is just double checking it with the download. But the reason I brought these up is because the electronic policy delivery is where issues are coming into play. I mean, you can have issues with anything, but this is a big one. So sometimes agency staff can get a little bit lazy when it comes to downloads of policies. So they know they wrote it right, the application is correct, but did it actually download correctly? Was the policy actually issued by the company correctly? What mistakes? I mean, I don't know how many times we've issued policies with, new car replacement or a package on it, and it came down without it. And it was a total fluke. Yeah. So just because it's being sent to the person directly and just because it's being downloaded into our system doesn't mean we have any less of a reason to double check that policy.
Right. Yeah. You definitely want to double check and make sure it was issued with what was requested.
And you definitely want to make sure that if you're delivering the policy to them, let's say via email, or maybe you have a website that they have a portal that they can log into to view this, not the carrier website, but your own website. You want to make sure that you have the security in place that's required to protect their personal information. We're going to talk about that a little bit later. But additional E&O processes to consider: changes and endorsements. So we talked about new business. We talked about the quoting process, the delivery process. Great, you got the client now. Now they're going to have changes and endorsements. And the most common errors are going to be failure to add the endorsement requested. Oops, they got a new car and I forgot to add it a week ago, and now they got into an accident. Failure to add the additional insured or the lost payee. That's a big one as well. And then also making changes by an unauthorized person. And Ashley and I were talking about this earlier. Again, this could be another, what would you do in this scenario, our PowerPoint, but you have to be aware of who the named insured on the policy is. If the kid is calling you saying, hey, add this vehicle, and it's titled in just his name, you can't do that. You have to go and call the parents and make sure first. If John and Mary are getting divorced and they're both named insureds and Mary wants to cancel the policy, do not cancel that policy until you have signatures from both people. So there are definitely a lot of caveats in making sure that you are making the change and that's an authorized person that asked for that change. And then claims handling. Do not deny a claim. Even if you know in your heart of hearts there's absolutely zero coverage for this claim, there's no way it's going to be covered, it is not your job to deny that claim. You can advise them on the coverage that they have and then say, let's turn in this claim and we'll have the company deny it. So definitely one of the biggest things, do not deny a claim.
Yeah, definitely turn it over to the carrier, let them do the investigation. You never know. There could be something small that happened in the situation that's going to trigger coverage. So don't deny it and then set yourself up for something to happen to you. Another good renewals. Make sure like when a renewal is coming up, you guys are giving yourselves adequate time to go over, like just touch base with your insureds and see if anything's changed. Personal and commercial, like make sure you're checking to see if they've gotten any new hires or anything that's going to reflect a change in their renewal, and make sure they're happy with the coverage. Talk to them about it and just see how they're feeling. Don't just try to avoid just the automatic renewals, because that's when things have happened. They don't know. They're depending on you guys to know this. And they're going to say like, well, I didn't know about this. And then you could open yourself up to a claim, even though they never told you, but you sent them their renewal policy and went on your way. Again, and if you're going to remarket, you want to ask about exposures that have changed, but you also want to make sure that you're taking a look at old deck page, like their prior deck page and their new deck page. And if any coverages are different, you're pointing it out to the client. like not just the savings, but if like, hey, this policy had this coverage and this new policy, you're going to save $100, but you're losing this coverage. Like, this is what that means to you. Make sure that they understand those coverage differences so that they can sign off on saying like they understand that they no longer have UIM coverage.
Hey, Abe, let's do a time check. Where are we at here?
Well, we are. If we, in an ideal world, we wrap it up in about 4 minutes, but we can keep going. So it's
Okay.
you're totally fine.
Well, we just did an overview of those 4, so we'll just kind of go through these next slides quickly, and those watching can stop and look at them. But the one thing I want to note on the changes in endorsements, and trust me, some of you are going to say, I can't believe people don't do this, and some of you are going to say, what? I'm supposed to be doing that? I'm saying it because we've run into this, and every time I've given a presentation like this, somebody looks at me and goes, I can't believe it. You need to get sign-offs on removing coverage, removing a vehicle. I know it sounds crazy. Some of you are like, yeah, duh. Well, guess what? There's people that don't do it. And taking a call over the phone is not a sign-off. Just because they're calling and asking to remove a car from their policy or remove a coverage from their policy doesn't mean that they can't call you back and say, I never called. Unless you're recording phone calls, there's no way to prove that it was them that called in to do it. So whether you're mailing them a form for a signature, you can email, just have them email and say, effective this date, take this coverage off. Or you can even have them text you and say, hey, effective this date, take this coverage off. As long as you have something documented besides a phone call, that's that extra layer of protection for you. And now we will go through these other topics, the claims handling, the renewal processing, the remarketing that we talked about. Let's just touch on cancellations and non-renewals really quickly. And Ashley, I'll let you take over here in 1 second. The one thing that I want to heavily emphasize is, and I'm a hypocrite for saying this because we did it in our agency at one point, stop reaching out to people that don't pay their bill. I can tell you off the top of my head, 5 people back home that I know I was consistently calling every month because we're a small town. You want to help them. You know they're good people. You know that they're going to pay it eventually. But guess what? If I called them the first 6 months of the year and forgot on that 7th month, the policy lapsed and they got into an accident, they're coming after me because they're going to say, you didn't call me, even though the company sent 7 reminders and emails and birds flying through the air and smoke signals. But because I didn't call them, it is now on me. So that is my plug for cancellations and non-renewals.
Yes, cancellations for non-pays, like it is hard not to remind them that their bill is due, and if they don't pay it by this date, it's going to cancel. But don't do it. Like it has resulted in an E&O claim because an agent consistently did that, and then they didn't, and the insured didn't ever pay it, and they had an accident, and then they were able to show that the agent called them multiple times. So avoid it. And then let them know after the policy is canceled. You can say, hey, your policy canceled due to non-pay. We need to get your coverage replaced ASAP. Now, if the policy cancels for not underwriting reasons or non-renewals, you need to make sure you're letting the insureds know with plenty of time to shop their coverage if you can. If you cannot place their coverage, you need to let them know immediately so they can find coverage elsewhere, and then you're not held responsible for them not having insurance coverage. Those are the biggest things that we like to point out to the agents.
Not to mention, you can use that time that you were calling the people who don't pay their bills to call people who do pay their bill.
And check on their renewals.
Well, and to check on the renewals, but new business too, right?
Yes.
Find the people that will pay and that you don't have to spend time on every month.
Exactly.
Okay, we're gonna hop over this cyber risk information because again, that could be another hour-long webinar. And I just want to touch on the social media exposure.
We will have to do more webinars on those specific subjects because this is fascinating. I mean, I've learned more in the last 40 minutes than keep going. Sorry.
I am a huge insurance nerd. I love insurance. So this is my jam right here.
It's awesome.
The biggest thing that I want to hit on with this one is misrepresentation. I mean, you guys can read over all the other areas where you can potentially be held liable, but defamation and misrepresentation are the two biggest things, because what are they called? Keyboard warriors. We've got some keyboard warriors out there that maybe they're saying some negative things about your agency, or maybe my favorite thing to do is to look at a comment or a post that says something like, oh man, my insurance agent didn't cover this claim. I don't know why, I'm so mad. And then you have Jim and Nancy from down the street going, well, it definitely should have been covered. And Jim and Nancy are like bakers and they know nothing about insurance, which, good for them trying, but I love just trying to read those things. So as an agent, you get fired up and you want to respond really fast. Do not do that. Keep the comments positive.
Yes.
They can definitely be taken out of context. So take care in what you're saying. And then with the misrepresentation, it's okay to answer generic questions. Should I have, like, what is flood insurance? Okay, that's easy. What is an umbrella policy? It's okay to, or what does collision coverage cover me for? So it's okay to answer those questions. But as soon as somebody comes on and says, well, hey, Ashley, this is the scenario that I was in. Is this covered? When it comes to a specific individual thing, then you have to take that offline and go into a conversation like you would typically within an agency. So keep it general. Keep it nice. Those are your social media things that you want to keep at the top of mind.
Also with social media, even like your agency website, a big tip that our E&O carriers preach heavily is do not over advertise your knowledge level. Do not call yourself an expert on your website, because that can open up a whole can of worms. If a claim were to arise, like, well, they're an expert in personal lines coverage, but yet they didn't even recommend this type of coverage for me, or they're an expert in trucking, but they forgot these 3 coverages. So just using words is very important, and making sure you're using the correct words. So we recommend not advertising expertise on your website. So.
So when describing myself, say things like average intelligence, mediocre business philosophy, lower the bar, be like, hey, no, I'm totally joking.
I'm just general. It's fine.
So, but
you chose the mediocre insurance agent.
As she was saying that though, like it's hard to, I'm going to send you a link. There's a link that says, instead of saying this, say this. And I read it. I just found it a week and a half ago. And I was like, oh, wow, I didn't think I could say it that way. And it makes more sense. So you're not saying I'm an expert.
We will post that in the description of this video.
Yes. Yeah.
Yep. So with all of that, we are at the end here. I mean, like I said, we blew through that. That should have been a 3-hour webinar, but we got through it.
Yeah.
We'll have 2 more segments, because this is interesting for real. It is really, because even I've been an insurance agent for a long time. I've owned an agency. We operated in several states, and I'm sitting there going, good thing that was never an issue.
I know. It's fascinating. Yeah. Like when I first started with the E&O industry, I was like, wait a minute. I didn't know this. Like, holy cow. And I came from the carrier background. So I was on the underwriting side of things and training our underwriters. So it was eye-opening to see what you need to look for with E&O. And I'll touch briefly on this, because we talked about ways to protect yourself. Yes. Another very important factor is what carrier you're putting your own coverage with. It is a huge asset to your life. You want to make sure that you have the right coverage. So just a quick high level things to consider when you are looking for an E&O carrier is what type of form they offer. There's various forms out there, but the ones that we see the most are a claims made and reported, and an occurrence form. Claims made and reported is the most restrictive of the 3. And it comes into like when a claim is filed and like the policy period. So the verbiage can limit your coverage, and it could actually end up denying a claim that's valid. So we want you to make sure you understand the different forms that are available to make sure you're selecting the right one for your agency. Another important thing to think about when you're selecting an E&O carrier, especially if you're moving, is your retro date. You need to make sure that they're going to cover your prior acts back to when your agency was established or when you became the owner. Because if you take a current retro inception date, or they say that they are only able to offer you that, it's just leaving so much coverage back behind you. Like,
Gap.
yeah, big, huge gap. So that's a very important thing to think about. Deductible type. Their carriers offer different types, but just making sure you understand what the difference is between a loss only and a loss in litigation. The loss in litigation deductible is generally a lower premium, but because it's not as broad of coverage. So making sure you understand the difference and you want to take that loss in litigation versus a loss only deductible, which is a broader of the two. Defense limits, making sure you know if your policy, the defense limits are within your limits of liability, which erodes at your E&O coverage, or if it's outside. So that's a good thing to look at. And then specific type business coverages that you're writing in your agency. Some carriers might not offer E&O coverage for those exposures. I know the trucking industry is like a specialized industry, and some carriers will not cover E&O claims on that type of business. So you want to, you want to bring it up with your carrier. And if you're, hey, now I'm writing trucking coverage, like I just want to make sure everything's okay with my E&O insurance, or do I have to do something different? Just bringing that to their attention, and they can guide you, and they can let you know, hey, it's not covered. So then you need to shop your coverage, especially if you're going to start doing that. So those are just some high level things that I wanted to point out in looking at your own E&O carrier.
Absolutely. And then you guys are Ohio insurance agents, ohioinsuranceagents.com. We've got the phone number 800-555-1742 on the screen. Got a couple email addresses. And so you guys do cover, you guys provide insurance agents E&O coverage in Ohio, and what's the other state?
Indiana.
Ohio and Indiana.
Yeah.
So say somebody comes to you in Florida or Arizona. Do you have a referral for where they can go to get sound advice and sound guidance on this? Okay, so call anyway.
Yeah, we can definitely help them. Yeah.
Okay. No, yeah. Well, I was gonna say, then you guys too, because I know one of the other things you provide is the IA valuations. I sat through. That's how we met. That's how I met Jeff, and one of you was there. I forget which one.
Probably
but
Fitz.
it was in Orlando. But I sat through you guys' class, and we did a whole segment on mergers and acquisitions. And I would always ask, like, what can you do to increase the value of your insurance agency, like long-term approach-wise, right? Like to where you're building it with the end game in mind. And, I kind of get like a deer in the headlights from most of the people. And then they were like, wow, insurance agencies are valuable. You just sell them. And then I sat through Jeff's presentation in Orlando, and I was like, this is the information I was looking at. And then we ended up having him on the podcast and posting that, and it was awesome. But, so that's another. So even if you can't get errors and omissions coverage from Ohio insurance agents, their division IA Valuations can definitely help you structure your agency for long-term growth and eventual acquisition, easy acquisition, right?
Yes.
As easy as it can be, because you'll have all the components in place to make your agency worth the most amount of money, which those multiples, like when you're like going from like, wow, like 3x to 4x or 4.5x, that's big bucks. So it makes a big difference.
Yeah.
That's a whole nother subject, but
that is, because the research that I've seen on the presentations, it's astounding, like how much money agents are leaving on the table when they're selling.
Oh, for sure. I mean, just the age of your workforce, all the different factors in place. That's like, if you can check all the boxes, all of a sudden people are bidding much, much, much higher to acquire your agency, and that can make a big difference. But we totally appreciate you guys. This has been awesome. It's been informative. I think it's going to help a lot of agents. Again, ohioinsuranceagents.com. 1-800-555-1742. Ashley Riley, Ashley Fitzsimmons were both on this presentation. Jeff Smith was too. But we appreciate your guys' time and this presentation. And I absolutely positively want to have you back for those other segments, because I don't even know what I don't know in those sections yet. And I need this information too for me. So
well, thanks for having us. It was wonderful being here.
Great. Thank you so much.